Live? Yeah, okay. And I think we're waiting for Igor to come on. There we go.
I'm on.
Good morning, good afternoon, actually, Igor. Thanks for joining.
My pleasure.
Thanks to the audience joining our webinar around Ready to Trade with DTCC. I'm joined here with, and you got to forgive me if I get your last name wrong, Igor Gramatikovski.
Well done.
Correct, right? Director of Product Management, I believe, right, at DTCC.
Right.
And I wanted to welcome everyone for joining this session with us. Just as a heads up, we're going to have a cadence around these webinars. I think about maybe every 2 weeks or so. We'll definitely have a schedule out on the website, so please tune into that. But digging deep here real quick, Igor, I'd like to give you a chance to introduce yourself to our audience. So I just gave your name and title, but maybe you can give a little bit on your background.
Absolutely, Gabino. First of all, thank you for inviting me. I'm very excited to be part of this webinar and also very excited about our partnership. I'm the EMEA product manager for a product called Alert, which I believe to all the industry veterans and market practitioners will be familiar. My responsibility within the Alert product management team is to drive adoption of the new APIs that we released last year, exactly a year ago, Ready to Settle being one of them. Also, I come from a securities, settlement, and custody background, and that kind of ties in very nicely with the topic of today's discussion, as well as the partnership that we have between the two firms.
Thank you for that, Igor. And myself, I'm Gabino Roche, CEO and founder at Saphyre. There's a big background, but I think people can find out about that online. What I want to do real quick before we get into the discussion is to remind everyone that we're going to have a live Q&A session. And so if you're aware, what you want to do is to either use the Q&A functionality on Zoom to submit those questions, or you can email at events@saphyre.com. Again, that's events@saphyre.com, or again, the Q&A functionality within Zoom. Now, if you want to ask the questions live within the Q&A functionality, be sure to make a note that say, hey, we'd like to have ask the question verbally to Igor and Gabino, and our administrators will unmute you and allow you to ask your question verbally. And then we might even have it back and forth. But we'll do that a little bit later in the discussion. So Igor, everyone's very familiar with DTCC. You just talked about Alert. Let's talk about the genesis of things, because in particular, Alert came out with a new service offering called Ready to Settle. Maybe you can talk about that a little bit in the context of Alert holistically.
Absolutely. I think as most of the participants will be familiar with Alert, we are a database and a global repository of SSIs, standing or standard settlement instructions. We have 16 million of these that cover all markets worldwide. Out of those 16 million SSIs, 2.7 million, close to 3 million are essentially cash SSIs. The rest of them are securities SSIs. And Alert is all about a community. We have a community of 2.2 thousand buy-side or investment management firms and 1,500 broker dealers. So a community close to 4,000 institutional users worldwide. The sell-side community have traditionally been accessing Alert through a long-standing API and an interface called Alert Broker Direct, which I'm sure the ones of you on the sell side are very familiar with. On the buy side, access has not been as automated. And in the vein of addressing industry challenges in light of shortened settlement time cycles, we've started opening up Alert to the buy side community in a more automated way. And in that, we actually launched two APIs. The focus Ready to Settle that we will be talking about today aims to address a particular problem that we've heard throughout this vast community of users. People are not always certain whether something is ready to settle, even though it's ready to trade. You can think of it as you could be the ready to trade person addressing the industry challenge of whether a particular fund is ready to trade in a particular market. But as we know, people very often forget about the post-trade world. The settlement isn't always top of mind, and then people scramble to find out if the custody side, if the post-trade processing side is ready to actually settle that trade which is traded. To address that, the first API that we've released, the Ready to Settle API, is essentially a request response real-time API that users can query in order to obtain the answer to the question, is my account for a particular market ready to settle? Are the custody accounts open? People know what SSIs are. Essentially, they're a bunch of accounts, right? So the question that implicitly is being answered, are these accounts opened at my custodian? And further down the settlement chain, are all identifiers populated so that the trade on the settlement instructions can actually flow down that investment value chain?
And I think what's happening here is DTCC is now offering a more proactive method of getting ahead of this, especially in light of the T+1 movement we're seeing globally. And it's all about the fact that a lot of the stuff is discovered after the trade's already been committed, executed, and then afterwards you're trying to scramble to settle it. And we no longer have 48 hours to settle these issues. It has to be done within 24 hours. And we know that Europe is already kind of moved towards this. And was it October 2027? And right now, we know that Alert is really basically the global repository of these standing settlement instructions, in particular, especially around security. So it becomes even more important. I think this is where we can kind of fit this into a larger picture, because Saphyre has been addressing more of the proactive nature of like the onboarding and some of the maintenance activities, whether you can trade. You spoke to this a little bit, Igor. Before I go there, I kind of want to talk about what happens when you're not ready to settle before we get to ready to trade, and how this all creates an impact. It's a combination of both, actually. And so let's cover the ground. And I think we have a visual to share just for the audience, because again, we can say words and then track. So, and we kind of, I took a stab at this with you offline, where we had 6 areas that we're thinking about. And one of the things I'm definitely going to hit with you, Igor, is the operational impact. We know there's a financial impact. And of course, there's always the regulatory and compliance risks that are centered around that. But then there's these other nuances that don't always bubble up to the top, right? The fact that you're actually spending more resources by not being proactive to kind of catch these things. The reputations that sell side have with their buy sides for maybe not being aware what's ready to trade, what's ready to settle. Conversely, the same thing with the buy sides with the particular sell sides. And then the buy side's impact on their portfolio management on the back of this. I wanted to talk a little bit, again, it might be anecdotal. You and I, in preparation for this, we want to be careful about citing exact examples, because it's not like we're pointing to a particular firm or anything. But when we talk about, let's say, operational impacts, we've seen regulatory actions against firms, and what happens is, under the umbrella of where they haven't done appropriate reporting on transactions. But a lot of that is derived from the fact that you were trying to resolve the issues around the settlement, so you were late to actually report accurately to the regulators. There's a lot derived from the fact that the settlement instructions weren't aware, or you weren't sure that you can actually settle. And what I see in my experience in working in the sell sides, and I had a history actually in a previous life working with DTCC itself, but we saw firms creating these stopgap laborious manual setups to kind of catch these issues. Oh, wait, the transaction reporting wasn't correct. Let's put a check in here of people reviewing that. Oh, wait, the SSIs weren't filled in. Let's do another check before that. Oh, and then they just create these manual checks all throughout. And what we're getting at here is, DTCC, you have between CTM, Trade Suite, Alert, and now this ready to settle offering. And then we're going to talk more about how Saphyre now integrates that ready to settlement information proactively out to both buy sides and sell sides. In your view, how have you seen those operational processes work to date? And if with this move to T+1, do you think it's still sustainable?
So there's a lot to unpack based on what you said. I think one point that I wanted to pick up on, you're absolutely right. People forget about the human cost of actually managing settlement failures. So there is a particular research that captures the whole industry, and obviously that doesn't touch upon any of our individual users. As you know, our users are STP. They're very, very efficient. So, and now, especially with the joint solution, they will be even more efficient. But as an industry as a whole, in 2023, 2.5 billion were allegedly spent only on human resources managing exceptions. Obviously, every individual firm is going to have different costs of managing their own settlement failure and exceptions depending on their rate cards, where they're located. But there is another thing that people forget about when settlement failure occurs, the opportunity cost and the knock-on impact, right? Because very often settlement doesn't happen in isolation. It's part of a larger chain with the T+2, even in a T+1 environment that we're operating now in the US. Essentially, there is a trade that happens, but before it settles, there might be a subsequent trade. A failure anywhere down this chain will actually have a knock-on impact, and calculating the failure becomes actually, or the cost of that failure and resolving it, the cost you need to apply in order to resolve it, can very quickly multiply several times. And what we're seeing today is that firms who are investing in technology, in solutions such as Ready to Settle, solutions such as yours, in order to ensure that the accounts are open on time and they're actually clear as to whether they can actually follow through a particular trade, not only from conception and execution, but actually all the way to ownership, legally changing out the depository. Those firms are reaping the benefit of a T+1 environment. Firms who are actually applying more staff, they're probably seeing their cost multiplying. And to answer in short your question, it is definitely not sustainable. And as a larger part of the world is moving towards shortened time cycles of T+1. Specifically, how we could help with that, essentially, we give them that technology solution so they don't have to apply the individuals that you mentioned everywhere along the process, everywhere the step, and they have to then go and remediate things that have gone wrong by actually making sure that nothing goes wrong and they achieve SDP throughout the whole process.
In taking some examples just for the audience to hear this, and this I think especially is beneficial to issues around block trades, because you and I talked offline ahead of time too, and we may get questions around this. You know, hey, I may have a preferred place of settlement or something. Well, we're not going to resolve inventory management issues with this proactive method, but what we can tell you, and what DTCC is actually enriching as part of this data feed with Ready to Settle, and then how we're combining it with Ready to Trade via Saphyre, is you'll know every single market place of settlement combination for the particular asset class, whether that settlement instruction is available or not. It's basically a thumbs up, thumbs down. You'll know right from the get-go. And this is, again, I know we've been primarily promoting this to the buy side, and clearly there's a benefit here. And I know that you probably watch some of our news that, you know, are Aladdin and whatnot, and like how this becomes very important from a portfolio management standpoint to get awareness on whether you can actually settle successfully on a given market. This is hugely important, but the sell side also gets that same benefit. And this is something that I know that these DTCC already provides via its existing integrations with those sell side firms. But again, there's this proactive nature from the same solution. And I think if you don't mind, I kind of want to give a more holistic picture, and I'm going to talk more also about the portfolio management impacts and the regulatory issues, because you know, we use that example, and you know, Credit Suisse has now been acquired, right? But you know, you saw the billions in losses there, and part of the challenges is that was more related to the risk exposure and margins and whatnot. But at the end of the day, it was really having a holistic picture on what accounts were set up and how do you link those accounts together to have a view. And if again, my team can put the holistic network picture that we want to put together. DTCC, again, being the primary repository of these standing settlement instructions accounts being updated, but then putting that together with a network impact. And there's a lot that's being said on this slide, but I want to give, for a particular buy-side firm or an asset owner in the middle here, if you're trying to go out to your network, you're looking at the top when we say asset servicers, like your custodians. They're managing all that information around what markets and currencies they've actually opened. And even though they may have been opened, you know, we've had buy-side firms had failed trades on restricted markets, like the Indian rupee, or any trade, security trade in the Indian market itself. And what happens then is that status no longer is open, the tax form has been maybe expired, it's not your sell side counterparty's fault. It's actually your relationship with your custodian, where you have to actually maintain that information proactively. This also comes into play from a ready to trade standpoint, where we combine this with the ready to settle from DTCC. When you look at the electronic trading platforms in the lower right-hand corner, you may be trading across multiple platforms, right? And there's examples here of some of the things that Saphyre works with today, and FXall being one of them. Are you configured and mapped to trade on that electronic platform? And then given the status of those marketing currencies, given the statuses of the SSIs, can you settle successfully if you go ahead and trade on those accounts? Again, combination of ready to settle from DTCC and ready to trade from Saphyre, made available to the front office teams of the buy side and their trade support teams as well. But the converse is also available to the sell side in the same manner, at least in the Saphyre world, because when firms use Saphyre with their counterparties, we create memory around the relationships, trading accounts to the electronic platforms, to their order management systems, sell-side counterparties, and their custodians. And that's what makes this more of a holistic package deal, the alpha and the omega, the pre-trade onboarding and maintenance to the post-trade statuses on the settlements. And I'll give a couple another few quick examples. You may have your LEI registration status expired. This actually impacts whether you can actually settle successfully, which is tangential to the SSI itself, but it also may require you to switch the fund that you're allocating against, which then also impacts your time to settle in time, right? If you know that proactively. If you've had trade termination events, or if you change some of your custodial instructions, like for the funding of your security trades, whether you can successfully fund them or whatnot, those details are also incorporated into this. And I think we could step away from the slide because I don't want to bore the audience with like too much noise up front. But Igor, you kind of said it before. If you have to spend all this effort in post-trade, I'll give the impact from the regulatory and portfolio standpoint. A portfolio manager then finds out that they can't successfully settle on a particular allocated account, even let's say not even just a direct trade, but like a block trade. They then have to find a new account to settle against or recalibrate those allocations. Okay. And then
Or just imagine if there's a corporate action that is due, right, at that time, and all the costs that will arise from that.
correct. And then or what happens, another thing is where they insist that they have a preferred place of settlement. I always like to use the example, like I want to go and settle in Euroclear, but your account doesn't even have a standing settlement instruction for Euroclear. You only have one for Clearstream. You must use that. You can stay scream until you blue in the face. The only way you can settle on this particular account is by that. And this is, again, where DTCC enriches that information. It says thumbs up, thumbs out. Can't do Euroclear, but you can do your Clearstream. Like, again, fabled examples, or maybe some people can relate to that. The time frame when you've got maybe hundreds, thousands of accounts that you're trying to settle, some of the sell sides in particular have millions of trades that they're trying to settle. And you have a few hours in the day to do this in a T+1 environment, not sustainable. This is where that proactive method comes in, where you get the true STP. What is the sentiment you've heard, at least from your network and the conversations you've had, let's say, with buy sides and sell sides, on that proactive nature versus what the state of the world was like, especially in the pre-T+1 state, if that makes sense?
So as you said, with the shortening of the time cycles from T+2 to T+1, essentially you're not just using one day, losing one day, you're losing 83% actually, according to the calculations of my colleagues at DTC, how much time you have in order to get a trade from an execution point to settlement. And this is actually placing a lot of pressure everywhere along the chain. And one thing that I would summarize on what you said our solution is about, it's about building that vertical integration. So not only a community across, which is what we've traditionally done in Alert, and we've actually connected post-trade processing folks and settlement folks from one organization, from the buy side to the sell side to the buy side, but we're actually now addressing the sentiment of the fact that this shortened settlement lifecycle will have an impact to the front office. So this vertical integration actually helps teams adjacent to people who typically look at Alert every day. The front office, your portfolio managers, your buy side or sell side traders wouldn't have even cared about the settlement cycle, but now they're actually thinking about this because it will have a financial impact, whether it's penalties, whether it's reputational impact, whether it's this knock-on effect or the human capital cost that we spoke about. So the sentiment that we're seeing is that this proactive approach actually doesn't necessarily go just across the industry, but even within the same firm, it goes vertically from the front to the back office, connecting them together. And this is what we're trying to do, both with Ready to Settle, which when I looked at this and I was thinking, this API doesn't actually give you the underlying SSIs. It verifies their existence, their readiness. Who will this be useful for? Our traditional users of Alert, they look at the SSIs day in, day out. However, when you go into adjacent teams, whether they're front office, whether they're client servicing teams actually investigating a failure, right? We have to accept the inevitability. Maybe it is, as you said, inventory failures. We can't resolve those. But nevertheless, around 30% of failures are due to SSIs, incorrect SSIs, or data problems. Those we can very much address. So in order to make sure that we're not on that critical part, all these teams servicing that, they can call up, for instance, the API and make sure that the SSIs are there and a particular market is ready to settle. Then the investigation will go into the inventory management team. So at least you're not losing time trying to investigate something which is not a problem.
And
And of
it's
course, the whole suite actually allows you to address issues. You mentioned PSET, right? So that is a common problem, especially in a market like Europe, right? The US had a very successful, I would say, T+1 migration, but then uh, while it is very big, right? It also is much simpler than the European market, which is very fragmented with the number of CCPs, the number of CSDs, different exchanges. So not only did you have vertical fragmentation, the clearinghouses not owned by the same entity as the central securities depository and the exchange is owned by somebody else, but you also have a geographic breakdown, different combinations possible across all these financial market infrastructure providers, which actually gives you a multiplication factor across the complexity.
Yeah, and that, to your point, everyone says, "Oh, T+1 in the U.S. market was a huge success," but it's monolithic.
Mm,
Europe is where you're going to see that fragmentation, and the cracks are showing. A lot of people name success, but they still had manual processes even in the U.S. market. That
mm,
manual process is not going to be the answer in, especially when the European market goes live in October 2027. There's something else I want to speak to. A lot of the portfolio managers that run the shops of an equity shop, a fixed income shop, they're looking at return on equity in
mm,
terms of their processes because the cost of the trades are increasing with these activities. And if you're a front office person watching this right now, this is what you want at your fingertips so that you get a real-time alert. I mean, this is the stuff that I know that Saphyre is also integrating with order management systems that I spoke about before, so that whether you're using Sapphire's interface, the API directly, or you're using it via some of our connections with the OMSs, EMSs that we connect to, you're going to want to know this up front so you can get ahead of it. On top of that, when we think about all the fines and penalties that are happening on the sell side in particular, but there was just an announcement by the SEC, I think January 15th,
mm,
where I think there's millions of fines that they have of buy sides and sell sides, where they're saying transaction reporting was inaccurate. But a lot of that has relation to the fact that they weren't able to settle things on time and the information was inaccurate. And because partly you're scrambling, whether SSIs or whatnot, trying to settle in time or understanding the issues from a pre-trade onboarding maintenance standpoint, whether you could trade that impacted the settlement process. And so people may think, oh, that was a reporting issue, but it was a cascading effect of a number of things, some related to the settlement processing or whether you were ready to settle or not, impacted whether those fines were actually going to appear. So I want to, unless there was another comment you wanted to make, I wanted to quickly go open up to the Q&A session to give a chance for the
please.
folks to come on. I did want to make a quick shout out that, again, the service from DTCC around Ready to Settle is live today. So is the service from Saphyre Ready to Trade. And Saphyre is actually incorporating, enriching the Ready to Settle offering from DTCC within the Ready to Trade offering as one holistic solution to both buy-side and sell-side firms. So if you have questions, feel free to email us at info@saphyre.com, info@saphyre.com on the back of this. But for now, we're going to open up the Q&A. And as a reminder, I wanted to tell everyone that if you didn't know already, on the Zoom function, you'll see something called Q&A. You click on that. You can ask your questions manually. If you wanted to speak and ask your question verbally, please put that into the Q&A written question, and our admins will unmute you, let you know and unmute you so that you can ask your questions verbally. You can also email your questions at events@saphyre.com, events@saphyre.com. While we wait for some of those questions to come on, Igor, if you don't mind, I want to let people know about our next upcoming webinar. Won't be about DTCC, sorry. This will be centered, I'm waiting for the drum roll here for the slide to appear, but this will be centered around the proposed standards from the FMSB and also around KYC refresh. So we know there's a big move now in the United Kingdom for standardizing how documents are being collected, how refreshes around KYC will be performed. So there'll be a whole webinar on this on February 5th, 12 p.m. Eastern, New York time. So be sure to look out for that. I'm looking to my team to see if there are any questions. I'm clicking in, Igor, and I'm going to read the questions out loud. If we got a name, I'll mention the name, but I'm just going to go down the list here of what I see. So the first question I see, and I'm going to put it to you, Igor, and of course you and I can take whichever
Sure.
wants to answer this, but will users of the platform be able to streamline account openings across Alert and Saphyre? So I got a quick answer for this. I'll let you answer in the back of me, Igor. So the onboardings and account openings are a big thing for Saphyre. So we definitely do this across counterparties, sell-side counterparties, custodians. There's kind of like a one and done experience. So that diagram that we showed earlier is part of the offering we give out of the box. And so not only when the account's first set up with your custodians for every market currency and sell-side combination, but we can also track every electronic platform you're mapping to. Now, from an SSI alert setup standpoint, I think right now we're investigating. There's no promises here where Saphyre can send entity information, I think, to alert. But I'll let Igor, you answer anything else beyond that.
So essentially, the partnership is about a synergy, right? You guys are the platform for account opening, and this could be front office accounts, trading accounts, custody accounts. This is not something that we do, right? Alert is the platform for the secure storage, maintenance, and distribution or dissemination of standing settlement instructions. When the two platforms come together, though, that's where we actually realize that synergy, and we give the value of clients to streamline their post-trade operational process as a whole. But as you said, to your point, Gabino, this is a first step in our partnership. We are open to responses from our community. When I said Alert is all about community, it's not about only connecting community, it's about listening to that community and listening to client feedback. What do our joint clients actually want us to do? So the direction that we want to go in next will be driven by what is their pressing problem. Account data is one very good point, right? So account data and all these regulatory identifiers, entity identifiers that get collected as part of the onboarding process, that could potentially be in Alert from Saphyre, right? Or we could look into various different potentials about how we can address the needs of different participants in the industry, what it is that they actually have a problem with. So absolutely.
Great. I got a couple more questions. Next one is, again, also anonymous. It's great that we can see when the funds are ready to trade initially, but most of our issues occur because something's out of date or has been updated later without our knowledge. Does this address that? So a couple things. in
I mean,
SAP.
I can take this, Gabino, if you want. I mean, there was one thing that I don't know if you picked up on when I actually said there is, and it's not mentioned in Ready to Settle, right? But it's the real-time component of it. So it is real-time, and as long as you call the API on a real-time basis, it will actually inform you. Yes, fully agree that the most important thing is something ready to trade initially. So I've opened the market. I'm very excited about establishing my broker relationships. I'm very excited about opening up the custody account. What if they get closed by mistake? What did they get closed because I've changed custodians? Or as you said, you gave the example, they've actually made the change. Now I have to settle it Clearstream or I have to settle domestically. Something has changed. By making the real-time call, you ensure that every trade is ready to proceed all the way down to settlement. So it's not necessarily once and done with the account, but actually you have the possibility of actually querying the API before executing each trade. So you get that extra level of confidence that it will settle all the way down the chain.
Agreed. So real-time APIs gives you real-time data, so you're getting ahead of it. The other thing I would add is that Sapphire is also giving you that expanded network connectivity across all the different parties, directly from the
Mm.
custodians, their market currency data, DTCC telling us the statuses of those SSIs, the statuses of your electronic platforms by trading instruments, the statuses of your sell-side counterparties by trading instrument with those counterparties. So the maintenance components are already built into this offering. The next question, which I'm not sure, I think I know the answer to this one,
Mhm.
Igor, is does the feature help me prevent allocation issues? I'm going to let you answer, and then I have a
Sure. No, I mean, the devil is in the details, so it really depends on what kind of allocation issues we're facing. However, obviously, DTCC ITP is a lot more than just alert, and CTM, our central matching platform, is also the platform for post-trade allocation delivery. So this is the place where clients actually do their post-trade allocation from the buy side to the sell side. In other words, this is where the post-trade allocations begin their lives, right? So previously, everything is executed on a block level, and then clients who do allocate, they distribute or they send their allocations to the sell side. So in a broader ITP sense, definitely that's addressing any kind of allocation issues, if that's what is meant by this question.
Yeah, and I think in the Sapphire context, again, taking that same information from DTCC's Ready to Settle, what we would tell them, and regardless of whether it's security based or cash based, have you hit a termination event on that particular allocated account? Because then you can't allocate. We're going to tell you that in advance. Is your KYC up to date, right, with the firm? If not, you're not going to be able to, or is your LEI registration status expired? Have you not amended a trading legal agreement like with your ISDAs or GIMRAs for, cash related trades, derivative trades? So these are things that we can actually let you know in advance so that you don't hit those allocation issues as part of post-trade processing. So that's the combined answer again from DTCC and Sapphire. Maybe we could take one more. And again, if people have submitted questions and we didn't get to it, we'll try to circle back with you in a follow-up session or offline. I know some folks I think have email questions, but we'll do one more. Let's make sure I got the right one here. I've been trying to get ahead of issues that keep occurring because settlement location doesn't always match my brokers. Can this help? Igor, you first.
This is definitely one of the most common issues that we're hearing about in the European market, right? So when you have a monolithic market in the US, obviously you know what your place of settlement is, although there are issues, right? Depending on what kind of securities. Are you settling at Fedwire? Are you settling at DTC? In the European market, are you settling domestically? Are you settling cross-border? Are you using a ICSD? Infinitely many more possibilities, and these complexities give rise to potential errors. Again, in the broader DTCC ITP context, CTM has the PSET matching capability, the place of settlement matching, which will allow you to avoid these kind of problems of mismatches against your brokers. But to your point, to the previous answer, together with alert, because alert is there to enrich CTM trades, or it is available to enrich CTM trades, you already get the correct enrichment both on your allocation level, so you avoid any kind of challenges of choosing the right settlement location.
One of the things that Saphyre does in this context is when you leverage Saphyre to establish a trading relationship from an onboarding, or if you take your legacy accounts and map them on Saphyre, we can ensure that what your view as to what SSIs are used or what you plan on using is shared with your brokers. And again, they already have their integration with Alert, so they're getting the SSIs via that feed. But you have real-time visibility proactively. So again, it's about seeing it up front. Your trade support teams can get this visibility via the same API that Saphyre and DTCC are offering together, and your front office. So again, smaller shops, they might be a jack of all trades where they can all see it. For the larger shops, might want to outsource that, or not outsource it, but give it to their post-trade support teams. But I think this was a lot for people to chew on, and I'm going to stop it right
Definitely.
here. Igor, I want to say a big thank you. Honestly, the partnership with DTCC has been phenomenal, and I've been so excited about it since May 1st last year when we announced it.
Likewise.
It was one event. You've been a phenomenal partner, Igor, Jen, Bob Stewart. I also thank them too, as well. I know we're in touch. Thank you so much for coming on. I think what I want to let everyone know is please stay tuned again. About February 5th is our next webinar, again, around the FMSB proposed standards and KYC. If you want to learn more about this offering, feel free to go to our website at saphyre.com/demo, and we can tell you more about the ready to trade with enrichment of DTCC's ready to settle offering via Saphyre. Thanks so much for your time. We'll see you next time. Thanks.